India witnessed a milestone on June 13 when it welcomed its first six-digit stock into the market. MRF, the Indian tyre manufacturer, became the first company in the country with a stock price exceeding Rs 1 lakh. Now, this remarkable achievement is the result of a journey that spans over 75 years. The story of MRF begins in 1946 when KM Mamand Maple opened a small manufacturing unit in a shed to make toy balloons. Now, the company quickly expanded its horizons and ventured into the production of thread rubber. Now, this eventually gave birth to MRF, also known as Madras Rubber Factory. Now, it was the only Indian company that manufactured the thread rubber, and the competitors were mostly foreign companies. By 1956, MRF had already claimed its throne as the leading thread rubber manufacturer in India, throwing out many foreign manufacturers and commanding an impressive 50% market share. Now, Mamand's ambitions didn't stop there. Now, he wanted to go beyond manufacturing thread rubber and set its sights on making tires. Now, in 1961, the first tire rolled off the production line, marking a significant milestone for MRF. Now, the same year, MRF made its initial public offering on the Madras Stock Exchange, opening up new opportunities for growth and investments. Now, from that point on, MRF's journey to the top has been unstoppable. Now, going purely by the share price tag, MRF is the most expensive stock in the Indian equity market among all the companies listed. Even renowned multinational corporation stocks like Honeywell Automation, which trades around 41,000 rupees, are priced less than half of MRF. Now, other notable companies on the list include Page Industries, 3M India, Shree Cement and Nestle. Now, one interesting aspect of MRF commanding a high price is that it has never split its shares. Now, usually to make the stock more attractive to retail investors, companies announce a stock split. Now, this makes the stock more affordable and more liquid. But MRF has maintained its original share structure, which has contributed to the impressive rise in its stock price. Now, it is worth noting that globally, there are companies that have achieved similarly high stock prices by not diluting their shareholding. For instance, Berkshire Hathaway's Class A shares trade at a 5,09,000 per share on the New York Stock Exchange. Having said that, it is important to note that the true worth of the stock goes beyond its price tag. Now, several factors come into play such as market capitalization, price to earnings ratio, and investor expectations of growth prospects. Now, these elements collectively determine the value of a stock and its attractiveness to investors, and not just the price tag. In the last 1 year or so, inflation has become a hot topic, with many countries facing high inflation rates due to increased demand after the pandemic and supply issues owing to the Russia-Ukraine crisis. Fortunately, things are finally looking up. In May, India's retail inflation dropped below 5% after reaching a peak of 7.7%. Now, the United States also saw positive development in its inflation data released yesterday. Now, the latest data shows that the US inflation decreased to 4% in May from 4.9% in April. Now, this was slightly lower than the market's expectations of 4.1%. It is also the lowest level in about 2 years and less than half of the highest rate recorded in mid-2022, which was 9.1%. While the inflation rate is lower for the US, it still remains above the target set by the Federal Reserve, which is 2%. Nevertheless, the fact that the inflation is down to 4% is definitely good news. Now, to combat the soaring inflation, the Fed has raised the benchmark lending rate 10 times in a row since early last year. Now, the big question is, what will the Fed do in their upcoming FOMC meeting that is expected to happen this week? Will the Fed hit the brakes and pause their rate hikes, considering that inflation has hit its lowest level in 2 years? Or will they continue to raise rates because inflation still remains above their 2% target? Now, let us know in the comment sections about what you think. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com